Hello there. If you've stumbled upon this video, you're probably confused and stuck on bank reconciliations. In this quick video, I will demystify the topic of bank reconciliations with a simple example. Guys, here's my checkbook. I haven't written a check in a really long time, if I can be honest with you. Nowadays, we use online banking, so it's less common to use checks. And if you're not from an Anglo culture like Australia, the US, or the UK, maybe you've never seen a check. So that's often the root cause of trouble with this topic. Anyway, without further ado, let's dive in and demystify bank reconciliations. To understand bank reconciliation, let's go back in time. Let's go back to my experience when I started college. Back in the day, I went off to college and my parents were very generous. They gave me $100 towards my books and my living expenses. They also told me to open a checking account when I got to the campus. And I arrived there, I went to the student union, and what did I see? A kiosk from the local bank, and they had a sign in front of their kiosk. They had a sign, free checking account for the students. And I said, what a great idea. I can open my checking account right here. So on day one, let's make a column for day. I deposited $100 in the bank, and they then gave me a checkbook. And my records show on day one that I have $100 in the checking account. Now, on day two, I proceed. On day two, I proceed to write a check for $55 at the school bookstore to pay for my books. On the third day, I paid my rent, and I gave my landlord $40. Yes, I know rent would be more than that, but this is just an example, guys. And then on the fourth day, I know that I have $5 left in my checking account, so I go to the pizza restaurant and I pay for my pizza with $5. It's a small town. The owner of the restaurant takes checks from students when they show ID, and I realize that I have now spent all my money. So I call my parents, and they're freaked out. You spent all of that money so fast? Well, we will give you $100 more by Western Union. So on day 5, they Western Unioned me $100, and I put that money into the bank at 4:59, the minute before the bank closed. Now, on day 6, I want to tally up my balance in the bank account, and on day 6, I see my records show $100 in the bank. Now, let's get to the reason why we do bank reconciliation. Well, if we can now look at the bank's understanding of what happened and looking at the dates, on day 1, the end of day 1, the bank's records show that I have 0 balance. That's because of a timing difference. All transactions after 3:30 in the afternoon will be reflected in the next business day. So look at that. There's a timing difference. Now, in your accountancy books, in your accountancy exams, this would be called an outstanding or an uncleared lodgement. Lodgement, fancy word for deposit. So right now, our records are off because of a timing difference. Now, on day 2, the bank records my deposit of $100. But they also charge me a fee of $39 because I did not read the fine print. The checking account is only free if you sign up with $500 or more. I signed up with less than that, so they charged me a fee. So now my records do not reflect the bank fee. On day 3, the check that I issued for my books, let's say that clears. The bookstore takes that check right to the bank. It's the same bank. So they record the negative 55. On day 4, they record the negative 40. And guys, at this point, I am overdrawn. I have issued more checks. I've spent more with my checks than I had in the bank. So I am now overdrawn. My account is negative. On day 5, the owner of the pizza restaurant goes to the bank with the $5 check. We're at the same bank, guys, and the bank does not honor that $5 check because I am negative. They let me get away with a little bit, but because I did not set up an overdraft facility, they do not honor the $5 check, but they do charge me a $50 fee for bouncing a check. At the same time, the last minute before the bank is about to close, I ask for a printout of my statement, and I discover, lo and behold, that I'm actually overdrawn $84. Guys, this is why we perform bank reconciliation. It's an important skill for controllers, for financial controllers, for accountants. Let's understand where the differences lay. Let's correct our cash book. Let's prepare a statement that explains why the bank statement is different from our record of the cash. I'm going to perform 2 steps. Step 1, I'm going to update my records. I'm going to update my picture of the money in the bank, the cash book, as it is often referred to. The second thing that I'll do is I'll then prepare a bank reconciliation statement. So to prepare the cash book, we bring forward that $100 balance on day 6. And now we need to account for those 2 bank fees that we didn't know about. We had one for $39 and we had one for $50. And we also need to reverse that payment. One of those checks was returned, so we add the $5 back. We debit our cash book $5. Now, using our standard old school paper-based bookkeeping principles here, what do? We add up the bigger side, the debit side. We bring this here. And now we have a carry forward balance, a closing balance, our balancing figure. And we've got a closing balance 16. That is the correct figure for inclusion in our financial statements. Remember, the balancing figure, the closing balance, the carry forward shows up on the credit side, but it is actually, right, a debit balance. We have positive cash at the end of this period. Now, let's prepare that bank reconciliation statement to show where all of those timing differences are. And the bank statement shows us an opening balance. We'll start with that balance of negative 84. And we have that uncleared deposit or that uncleared lodgement for $100. And we arrive at a positive 16. So the closing balance in our cash book and our bank reconciliation statement match. We've done our job. We can now go home. Okay, friends, there you have it. The basics of bank reconciliation. I hope that helped. I hope that demystified the topic. At this point, please go back into your accounting book, read it again, see if it makes more sense. This is Steve signing out for now.